I might trigger some people for saying this, but in our community, we don't believe that trading is all about psychology. Before even starting to talk about psychology, you need to have a proven and back-tested edge with real data. And this is what we provide in our mentorship. But now that you have a proven edge, let's see what we can learn from these professional trading psychologists. Let's get into number one.
I think one of the things most people are interested is what really separates the great traders from the good traders or the traders that don't make it. What have you seen specifically in the trading field that leads to success, and what are those commonalities? And what might deceive people as or surprise people that is not so required to reach high levels in this field?
Yeah, well, I think historically, this has gotten a little better over the years as the psychology of trading has taken on greater prominence. But trading is filled with mostly young men who gravitated towards finance and historically have not been the most introspective or self-reflective. So a lot of times I've found folks in the trading world are not as aware of the kind of the role that the emotional psychological variables play in their trading decision making. So traders tend to be smart folks who think they're making rational intellectual decisions. But as you know, that trading, especially and the moments and involved in trades, like there's the intersection of the emotional psychological variables and the decision making is very impactful. So I think that is like a key factor is people need to become more self-aware of their own emotional psychological strengths and weaknesses, their tendencies. That is a huge factor. I think one of the things, the ability to acknowledge one's mistakes and errors and the willingness to be wrong and be self-reflective and learn from it. This is very similar to athletes. I think the athletes, they learn from their mistakes, their losses, their errors, and the best traders are willing to acknowledge. The best traders can admit that they're wrong, learn, get out of trades when they need to early, learn from their mistakes, and use those kind of negative outcomes to help propel them forward in terms of improving their performance. And this is like where men often over-identify with who they are as a person from what they do for their business. So people who over-identify, meaning that if they make a stupid trade, then they feel stupid, just to use that as an example, or they feel less than, as opposed to a good person. Good people can do things that are not so good. And so it's separating out your decision-making from who you are as a person, and that helps people, that distance helps people look more objectively on what they've done well and what they haven't done well and move forward.
Yep.
Yeah, that high win rate is very deceptive. I mean, the more important stat is the average size of your winner versus the average size of your loser. Much more important stat. And another related stat to that is what's the average hold time for a winning trade and the average hold time for a losing trade. Those are the kinds of stats you should be paying more attention to than your win rate. That'll determine your equity curve right there, much more than your win rate. You can have a high win rate and still be a net losing trader, or a low win rate and be positive. To answer your question though, Etienne, about what do you do? There's a lot of things. I mean, the big thing is we have to let go of the emotional connection and the ego connection to the outcomes, right? People let the money and the P&L define them, who they are as a person. We have to work to get beyond that and not let our trading define us as who we are as a person. So staying perfectly neutral all the time is impossible, but it is something we want to try and aim for. And there's a lot of things that we have to deal with, right? There's at the very basic physiological, neurobiological level, there's dopamine spikes that happen, right? You see some money lands in your account, put on an impulse trade, you get paid for it, or just clicking the button to get into a trade, you get a dopamine spike, feels good, you want to do it again. So we have to be able to not be driven by that, as well as our need for approval from others, how we are seen by our family, our friends, our community, neighbors, other traders, whatever your world is, that need to be competent and to be seen as good enough and successful. And so that really puts a lot on our self-worth in terms of how we perceive our self-worth. So separating the outcomes, what we have to do is we have to separate the trade outcome, whether I made money, lost money, separate that from the process that led to the outcome. And it's really important to separate and think differently about your process versus the outcomes. That's one of the primary ways, and it takes a lot of work, it takes time to do that. There's a lot of techniques and methods to do that. But the more you do that, the more you can kind of detach your self-worth and your ego from the outcomes.
I wanted to thank Blue Guardian for sponsoring this video. Myself and many other traders I know are adding Blue Guardian to their portfolio. They have an almost perfect rating on Trustpilot, and I personally love their 2 steps unlimited challenge and their very competitive 85% profit split. And I'll give you an advice with them. Make sure to join their Discord before buying a challenge. You should be able to find a discount code there. And if you can find one, just use mine, Money Engineer. So check them out with the link in the description.
At the bottom of it, whether or not it's a fear response or an aggression response, at the very core of this, behind the fear of loss, are the need to be right. Okay? I want you to hear those two. The need to be right. I've got to be right. And the fear of loss. At the very bottom of that is the fear of failure. The tough part in trading is there's going to be a lot of failure. In trading, you're really taking a random event and you're finding patterns that sometimes and sometimes not show up within that randomness. And so you're kind of it's partly maybe, who knows? But that's why you have your rules. That's why you have your stops. That's why you have your targets. You have all this there to be able to help you manage that risk. If only you could follow your rules when they're there. It goes back to this fear of failure. Think about that. The whole notion of us failing or not failing is what's at front center in trading. All the knowledge disappears when you come to that one big piece about, do I have fear of failure? Do I have to win to prove myself, to be a man, to be the winner? Yet you know the failure's there. And until you learn to fail well and to learn from those mistakes and to accept the mistakes as part of the process of trading, you're never going to be the kind of successful trader that you're seeking. How do you do that, though? At the bottom of it, it's core in your belief. It's literally that fear of failure is worked into the beliefs that an emotion is attached to. And what you're doing is every time you hit uncertainty, you're triggering underneath that the belief about failure. Oh my God, what if I fail? And the belief you have about failure is about you as a human being, not you as a performance. Yet when you start going, you know something, I see that if I accept this as a performance, that some fail, some not, I realize that the only thing I can really control is the mind that I bring into the moment of performance. You can't control the outcome. That's where a lot of this failure craziness happens in trading. And yet at the same time, it's something that's impossible. You cannot, never have been able to control outcome. Remember, this is about managing randomness and finding patterns within the randomness that may or may not happen and being ready to either say, ooh, that didn't work and get out, failure, or, oh, this is working, I stay in and I hit my target, success. Understand this, though, at the bottom of it, it's all about your ability to be able to fail and to fail well, okay? Or to accept that this is just simply the way it is. I can fail and it doesn't represent who I am as a human being.
With all the prop firms closing down, I made a video on how we can protect ourselves as traders, just right here. Alright, see you there.